BTIG's Jonathan Krinsky is getting cautious on Apple as it nears that milestone. Jonathan, from a technical side, what are you seeing?
Hey, Sarah. So, Apple's been on quite the streak. As of last Friday, it put in its fifth consecutive weekly gain of 2% or more, and that's the first time that's happened since 2010. So it's been quite a while. If we look back since 1990, there's been just 7 occurrences of it having 5 weekly gains of 2% or more. And what's notable is that when you look a month later, Apple's actually been down 6 of 7 times by an average of about 6%. The one time it was up a month later was in April of 2009, which was coming off the great financial crisis bottom. So I don't think that's really a good analogy. So what it tells us is, it's probably due for a breather. You mentioned that $4 trillion market cap. It can get a bit of a pullback, maybe around that level. And I think, we'd be a bit cautious as you head into January. You also have the possible tax implications where investors wait till January to sell some of their winners. And certainly Apple's been a winner. So a lot of reasons that suggest that it should see a bit of a pullback in the new year.
All right, cautious on Apple. What about the broader market? The S&P has had a weird month of December. It's been so dominated by the NASDAQ, which is month to date up 4%. The Dow is down for the month, and the S&P is completely flat. What does the chart tell you?
Yeah, so we had that massive dislocation starting off the month where you had 14 straight days of negative breadth, and yet the S&P really didn't flinch because of the big names got all the inflows. And so you had that massive dislocation. To some extent, that's getting resolved. You're getting some bounces from some of the oversold areas of the market. Small caps are starting to participate today. And we're in that, that 7-day window that's coined the Santa Claus rally. It's the last 5 days of the year, first 2 of the new year. So we started that period with some extreme oversold conditions, which is, a good sign for that Santa Claus rally. I think as we get into the new year and as we get back up to, 6,100 on the S&P or around those new all-time highs, the issue is, I think what we saw over the last couple of weeks was a bit of a shot across the bow. That type of breadth divergence, is something's going on there. I think it's related to the persistent move higher in both the dollar and interest rates. And so, those 2 parts of the market are clearly having an impact on areas like industrials, materials, energy. And so, ultimately that resolution, that divergence is likely to get resolved with some volatility in our view. And we think, again, that comes in January.
I feel like there are 2 types of people now. There's mega cap tech people and everybody else broadening out themes, small caps, that story. 20 seconds left. Who do you think leads into the new year?
Well, I think you do get a bit of a catch-up from those laggards, from the oversold areas of the market, the small caps, the beaten down areas of the market. But then I think it goes the other way once you get in January, where the mega caps that are, you get that tax selling in the new year and everything kind of maybe pulls back together. We haven't seen that high correlation sell-off really since the summer.
All right, got to go. Thank you, Jonathan. Jonathan Krinsky.